Fano has left. She is with Healthy Style New York and our new meteorologist. That's .com. And TJ McCormick has left. Now, replacing them, playing first base, I have Peter Spalletti. Is that right?
Yes.
Legacy
Spalletti.
Coin and Capital?
Yep.
All right, we'll get to it in a second. Next to me, Mitchell Goldberg, Client First Strategies. Is that right?
Thank you.
And Joel Peck, CPA. Joel's a respected CPA with offices in New York and Westchester. Okay, here's the timeline regarding the price of gold on each St. Patrick's Day over the last 5 years. Do we, by any chance, do we make this full screen? Do we make this? Do we make this? No. All right.
No kidding. Wow.
Okay. 05, $438. 06, $552. 07, $653. 08, $1,011. 09, $915. And this year, today, St. Patrick's Day, pot of gold, $1,152 per the ounce. Per the ounce. Okay, who wants to start it off?
Well, that's what's keeping the jewelry stores in business.
Bowling, if you follow me for, I don't know, I've been on financial TV for 5 years, bullish gold and oil since day one. I think it's going to 2,000 an ounce. Does anyone?
I think it'll go to 2,000 an ounce too. Probably, within a year or so, I think we'll see it up at that level.
That soon?
Yeah.
So we're going to see probably an 80-90% return in a year.
I think depending upon what things happen with the economy and the healthcare, I should mention the healthcare.
Peter, don't mention healthcare. What's the number one driver in gold right now? Peter's number one driver.
The declining the dollar, the
dollar decline.
Possibility of inflation coming down the line.
Dollar decline. Mitchell, what about you? What's your outlook first?
I believe in very strongly in the commodities play in general with a little bit of gold, but I have three key concerns. Number one is Yi Gang, the China's chief currency regulator, has de-emphasized gold and re-emphasized China's commitment to treasuries. So that'll keep rates low.
Well, time out. Take a step back. Re-emphasize China's commitment to
the treasury market.
To U.S. treasuries?
The U.S. treasuries. They have about...
China, for the first time in years, sold treasuries in January.
They've lightened up a little bit. They're trying to diversify their foreign reserves, which are the biggest in the world, upwards of about $2.5 trillion. But they said that they are still committed to the treasury market, to U.S. treasuries.
They have to be, though.
They have to be. They're taking
I don't think they could have said anything different.
They're taking on $30 billion of new American cash per month on average. They have about 1,050 tons of gold right now. And this fellow who I just mentioned said that he's worried that the gold market's a little too thin for them to put their hundreds of billions of dollars into. So they're worried about moving the market because it's...
So what's your number? What's your 2011, 317.11 price for gold?
I'd have to say a lot closer to where it is today. I'm going to go with about 1,200 to 1,400.
All right, well, how about you, Joel?
I don't pick the price of gold.
Okay.
What I do is I work with clients who want to invest in gold and then counsel them on the tax aspects as to how to hold it. Since beginning in 1997, Tax Act allowed people to actually hold bullion, when before they could only hold it as collectibles. So what Peter's company does is they allow separate managed accounts to hold gold. It's the only way you can
in the
buy
form
and
of
sell
bullion.
In form of bullion. It's the only way you can buy and sell.
And coins.
It's the only way you can buy and sell gold and get a 15% long-term capital gain. You're buying certain collectibles, you're buying ETFs, you're going to get 28% as the lowest rate of tax. You can't get it down to 15 without holding it in a separate managed account.
But we've seen what a lot of people do now is they're putting physical gold.
Wait, hold on. I can't. If I buy GLD and hold it for a year, I'm getting taxed at 28% for long-term capital gains.
Yep.
GLD is a collectible.
Yep.
Yes.
Yes. If you read their prospectus, it says it in the prospectus specifically that you'll be taxed at a.
I didn't know that. I've been trading GLD since it came out. I had no idea.
And if you do it in the futures market, you've got the 60-40, 60% long-term gain, 40%.
This is why people hate taxes. This is why we hate them. They're so confusing.
So work with an expert.
So wait. Let me bear with me, Mitchell. Hold on. Now, talk to. This is real important. All our viewers out here go, you know what? I can't buy $1 million worth of gold. I can't buy a futures contract. $250,000. I think minimum is 1,000 ounces, 100 ounces, $100,000. Is the minimum you're throwing around with a futures contract. In an ETF, you can buy a tenth of $1,000 worth, and you're going to get taxed. What about the coin market? Just tell me. So who's the coin? Anyone have coins?
That's what I was saying. A lot of people don't realize that you can actually put physical coins in IRAs, and for. I
don't want to talk taxes. Do me a favor.
No, that's what.
How does Pam in Kansas invest in gold through the coin market?
Through the coin market, they could buy pieces like this. This is like, depending on if they're going qualified or non-qualified. You can go both ways in the coin market.
Can I see that?
And you know that these are still the top infomercials? Do you know this?
I know.
Okay, so that at any
But-
given time you go on and you see them selling coins.
But here's what I'm getting at.
Okay.
Now there's bullion, there's actual gold value in a coin, and there's rarity value in the
There's
coin.
numismatic value in the
Numismatic value. Because we trade this. I trade this. I buy coins when the numismatic value is pushed, is low, where I'm just buying closer to the gold price. Where are we now with that?
Numismatic value is always ranges between 20 to 150% over the value of the gold, depending upon the coin. The numismatic value of the coin is going to be determined on how the quality of the coin and the rareness of the coin. The more rare the coin is, the higher the numismatic value is.
But don't these rarer coins, some of the older stuff, doesn't that number skew back and forth between?
It fluctuates just like any other investment, but they actually recently just pulled back a little bit in the last downturn. But that's why we recommend different types of investments for people with different portfolios. We recommend buying generic St. Gordon's, which is this is a generic lib. Buy something that's out there that you're going to always have a constant numismatic value on it, plus you're going to have the underlying value of the gold, and it'll continue to increase. So you have basically a double play advantage. You have two investments in one coin, numismatic and gold.
What is this worth?
Something like that is worth now between $1,800 to $2,000. Where it's an ounce of gold.
I have this. I have an 1879.
You should have bought it from us. When did you buy it?
I don't know. I buy gold coins all the time. In fact, if I'm going past a coin dealer and I have some money, and this is what I do. I've accumulated gold coins, Maple Leafs, Eagles.
A lot of people
Kruger
collect. A
Rands
lot of
now,
people do
yeah.
this. This is a lot of people's hobby.
And did you know you can buy a fifth of an ounce coin?
Yeah.
And I'm only pressing coins because coins there's a market for a coin at all times. I'm not sure that you can take a piece of bullion and go. I wouldn't even know where to go with it.
Listen,
No,
some people collect comic books, people collect coins. There's a certain joy aspect to it as well. Some people just enjoy managing their investment portfolios. And the advantage that I just want to pull in here, the advantage for the GLD is that gold is being traded now like any other tradable security, as much as any commodity or stock. So for a lot of people, not to get back into the tax, I'll say this one thing. The tax ramifications don't matter when you're trading anyway because it's all short term. Plus, you can buy and sell the GLD very easily.
We're user friendly. This is ADD. This is Strategy Room, where every man, Main Street wants to know. I don't care about GLD. I don't care about the mining efficiency in Brazil versus South Africa. I want to know how people invest. What do you say? Where should they invest?